Alrighty, folks, we tried to do the daily financial news live, and unfortunately, after 7 or 8 attempts, it appears that YouTube Live is not working this morning. At least it is not working for me. So I'm going to go ahead and record this so you can have it hopefully in about 15 minutes. What are we talking about today, folks? First and foremost, the consumer is predictable. Yes, folks, earlier in the week, we talked about new home sales coming out. We told you what the expectations were. To give you a reminder, expectations were from the experts that they would be up 0.9%. And I told you that I expected them to be up a lot. I expected it to be a blowout number, and boy, were we right again. Folks, why was this an easy and correct call? The answer is the consumer is predictable. What do I mean by that? Folks, if you haven't been paying attention in the housing market, we are seeing something very clear, and very clear, and the experts missed it. What is it? Rates matter. What do I mean by that? If once we get to 7% mortgage rates, existing home sales slow down. But who steps into the fray? New home builders. Folks, new home builders don't live with 7% mortgage rates. They live with 6, 5.5, 5. So what happens when rates go over 7? Marginal demand moves from existing home sales to new home sales. That is it. The experts are idiots for not picking that up. And yes, folks, we called a barn burner blowout number, and we were right. To give the actual numbers, last was 662,000. Expectation was an abysmal 669. We got 693. Again, folks, blowout numbers. We were right because we pay attention to the consumer. The consumer is predictable. They move in mass. And if you're paying attention, you can see things that experts don't see. Let's talk about another metric today that came out that is a little bit disheartening, and that is S&P Global Manufacturing PMI. What is that? Don't worry about it. Worry about the fact that it's a score on manufacturing, and it dipped into contraction. It came up with a score of 49.9. Anything below 50 is contraction. Last, I think, was 51.3 or 51.7. Again, the 50 number in this particular report is interesting. It did dip below 50 this month. So are we seeing a rolling recession? I don't know about you. We're in earnings seasons, lots of economic data. I think the rolling recession has to be a high probability, right? We just talked about new home construction doing really, really well. We just talked about manufacturing dipping into a recession. What about earnings? We got some earnings. What did earnings tell us about the economy? Well, UPS, we talked about UPS being one of those that we had to watch. Missed on revenue, beat on earnings. Folks, again, remember, as an ex-GL accountant, you as a executive can manage earnings within a little bit. So always watch revenue, especially if we are looking for signs of the economy. UPS missed revenue. In fact, operating margins are down as well. Shipping declined 3.2% domestic, U.S., North America, and 5.8% international. Yes, folks, we are shipping less boxes around the world. And again, UPS let their margin slip from 11 to 8%. So again, lots of stuff going on. UPS is saying, hey, we are slowing down. What about GM? General Motors, wow, beat top line, beat bottom line, and raised guidance. What's going on at GM? Well, it looks like it has been led by truck sales. Yes, truck sales. And again, what is going on with truck sales? Is it a sign that we are moving forward, right? Truck sales to me is a sign that small businesses are moving forward, perhaps picking up. Again, GM raised. How about JetBlue? Completely the opposite story. JetBlue missed and lowered guidance. GM raised guidance, JetBlue lowered guidance. Why is that important? Remember, one of the things that we wanted to know in this earnings season is what is going on with travel. What is going on with travel? Are we still FOMO and splurging, or are we cutting back? According to JetBlue, we are cutting back, and they lowered expectations. What about Pepsi? Pepsi, Frito-Lay, very big brand. It's interesting to see what's going on in the soda and snack market. Pepsi beat top line, beat bottom line. International actually was stronger than North America. So something to watch there. How about some more real estate on sale, folks? Real estate on sale. Yes, 995 Market Street in San Francisco. Sold for $62 million in 2018. It just retraded for 6.5. That is a 90% discount. Yes, folks, office is decimated in San Francisco. They've made some very odd choices, and they are paying the price. But I am convinced that the person that bought that building for $6.5 million, $72 a square foot, they are going to make gobs and gobs and gobs of money over time. It won't be today, it won't be tomorrow, but in the next several years, if you're buying all of that real estate in San Francisco, you too will become very, very rich. I want to call out a video that if you are in a relationship, husband, wife, married, girlfriend, boyfriend, that you really, really need to watch. I was lucky enough to interview Mindy Pineda. Mindy Pineda is Ryan Pineda's wife. She was gracious enough to come on the channel. The video went live yesterday at 5 o'clock, and she talked about talked a lot about their relationship. Talked about how they had to have a sit-down conversation. They had to deal with a very rough year, and I thought it was a very, very fun conversation. Also, when you're watching the video, you will hear about the Sharpie cabinets. I'll just leave that little tease there. Yes, Mindy told a story about the Sharpie cabinets, which I thought was hilarious. Just saw that Walmart is launching buy now, pay later. Buy now, pay later at Walmart. Really? Is that what we're doing? Pretty wild to think about. Altos Research gave us some housing data. 69,000 new listings, up 3%. 71,000 new contracts. Median price, $398,000. That is actually above the peak. Yes, folks, the crash bros are wrong again. I know, it's sad. It's really sad. The last peak, according to Altos Research, was $395. The new peak is, again, $398. Interestingly enough, in Altos Research data, price drops pulled back. We were expecting price drops, right? Price adjustments to increase. I think that's an interesting statistic. We will see if it's a trend going forward or maybe just a momentary blip in it. Folks, I am building a presentation for Northwest Action Summit. It is going to be about seller financing. Do me a favor, leave your seller financing questions below. I will do my best to kind of work them into the talk. I want to know what you all are thinking, what you would all like to talk about. Last, let's talk about high rates causing inflation. I think this is going to be a topic I have to run through with Anna Kelly. But yes, folks, higher rates leading to inflation. Let's play with this. Higher rates mean less production, right? Less production and solid demand, prices go up. Higher rates could mean higher operating costs. It costs more to borrow. So again, higher costs. Also, interestingly enough, we've always talked about a bifurcated consumer, right? The top 20%, have 50% of discretionary income, where the top 20% is earning 5%, like real interest rates, right? We haven't had real interest rates on savings in a long, long time. So they're earning 5% just sitting in cash. So I think that is pretty interesting. Let me know what you think. Are higher rates causing inflation? Yes or no? Because I think you can play it both sides. I don't know what my opinion is yet, but I do think it is an interesting argument. Folks, my intention with the daily financial news is to go live. It is to go live at 7:30. We have been doing that for the better part of 5 years. Unfortunately, I tried 7, 8, 9 times this morning and none of them took. So I had to record this and I will get this up right now. You're amazing. Like, subscribe, comment. I will do my best to do it live tomorrow. Technology, if technology helps me. Take care. Later. Bye.